So you might not think this, but here's why rising interest rates are actually pushing buyers off of the fence and getting them into a home. If you've been paying attention recently, mortgage rates have been on the rise. 2020, 2021, interest rates came crashing down, and we had a lot of our clients that were buying a home or refinancing get 30-year mortgage rates under 3%, which historically are some of the lowest interest rates that I've ever seen anybody get. And we have a lot of charts dating back to the 50s, 60s, 70s, and 80s where a 2%, 3% mortgage rate was completely unheard of. However, mortgage rates have been on the rise over the last 6 months, and they've gone from 3% to some people are even getting qualified for over a 6% interest rate on a 30-year mortgage. So if you've been planning on purchasing a home, especially this year in 2022, we're now in the summer, almost the summer of 2022, and you might be thinking, my goodness, rates have climbed so much that it's kind of looking a little unaffordable to us right now. I totally understand the sentiment and why that you might be worried about that, but I'd like for you to just consider for a minute the overall context and perspective of where historically interest rates have been. So just take a look at this chart right here. While the higher than average 30-year fixed rate mortgages in recent years is what we're seeing right now, the latest rates are still comparatively low than when you look at the bigger picture of where rates have been basically since 1971. So this chart is following the 30-year fixed rate mortgage according to Freddie Mac. You can go on Freddie Mac's website and see what the primary mortgage market survey says. So January 1971 through today, we see that in the early 70s, mortgage rates were right about 7%. And then we had a huge spike in interest rates in the early 80s, and they got all the way up to over 18%. Could you just imagine purchasing a $400,000 home in DFW today with an 18% mortgage? That would be completely unsustainable, and it would actually crash the market. But as you can see, monetary policy from the Fed has collapsed interest rates from 18% down to almost negative rates over the last 40 years. And so we are seeing the long-term effects of what has happened to the price of real estate as interest rates have come crashing down. So historical context is certainly important. Now, I know that historical context doesn't necessarily equate to what you are having to deal with today in your budget and the kind of money that you are trying to borrow, and the interest rate certainly affects your overall affordability. But again, if you just get a sense of proportion of where interest rates have been on a 30-year mortgage over the last 40 or 50 years, we're still at historically a low rate and well below what an average 30-year mortgage has been over the last 50 years. So let's just look ahead and see what might happen if you wait longer and you let interest rates rise more. So buyers are basically making two decisions today in the market. They are either deciding to jump in the market now before rates rise any sooner, or they're just completely putting off their buying plans and they're going to wait for interest rates to come back down. I know a lot of you are even telling us that you're waiting for the market to crash. And I got news for you. If you've been watching my channel, if you've been watching the news, I really don't think that we're going to be headed for a market crash. Maybe a slight price correction, but if you're waiting for the days where you can get a 3 or 4 bedroom home in the suburbs of Dallas, nice, for $250,000, $275,000, I hate to break it to you, inflation just simply will not let that happen. What would need to happen for the market to crash is basically everybody would have to stop buying homes, and that same amount of people would have to put their homes on the market and create a huge glut of supply, and very, very low demand will crash real estate prices. But we're already still having problems with inventory. We are getting more listings, and that's great, but interest rates are rising, and that's forcing some buyers to just get out of the market completely. And let me tell you something, we actually need that. We have had such a short supply of homes for so long now that we really have needed the inventory to rise relative to the demand. So if you are thinking about buying a home, you should really consider what is happening in the overall macro economy, and I'm just not exactly sure what's going to happen with rates. I'm not sure how the world can actually continue on in a negative interest rate environment. And why do I say negative interest rates? Because even today, if you take out a 5% mortgage, the government's already telling us that inflation is at 8.2%. So right now, you're actually experiencing a negative interest rate if you purchase at 5%. So something to keep in mind if you're thinking about buying a home. We'd love to help you out. Of course, we understand that about 85% of you are going to be borrowing some sort of money on a home mortgage, and we totally understand that that's going to affect overall affordability for you, especially if you were thinking about buying and planning, say, 6 to 9 months ago. The market has radically changed for you, but this doesn't mean that all hope is lost, and if you think more long term, it definitely is better to be an owner of real estate rather than not. The Fed has put out tons of research about the net worth compared to people that own real estate and the net worth compared to people that do not own real estate. And right now it's about 40 times greater if you are a owner of real estate compared to just being a renter. So we still think that home ownership is a great idea for you, even if there's a little bit of price volatility in the short run. Overall, the U.S. housing market has just continued to gain price over time, and you're not just buying a home for the next 6 months. In fact, I don't recommend that you buy a home for the next 6 months and just turn around and sell it. The cost of doing that is just not worth it. Now, some things happen, and that's okay. We'd love to help you out. But if you're thinking about buying a home and you're a little bit worried about what interest rates are doing today, it's worth still having a consultation with us and going ahead and getting pre-approved so that you can see exactly how that payment is going to work into your overall monthly spending plan. So if you'd like to know more information about what's going on in today's market and some of the interesting opportunities that are out there that you might not have thought about, give us a call at our office. Our number is 469-998-3322, or you can visit us on our website at mydallashomefinder.com. We hope you're staying safe out there. Summer's coming up. We hope you have a great summer. So thanks and happy buying.